Scott Bauer is the CEO of Prosper Trading Academy down at the SIBO. So Scott, the self-inflicted part of Uber might be their attempt to dominate everything delivery. We just saw from Grubhub, this is a tough market, man. So I wonder really how this is going to play a role in this earnings where Lyft is now the pure play and the shares for Lyft are starting to break apart a little bit.
So first off, I have to ask, did you share my notes with Michael? Because he hit the nail on the head with what I sent to you. There is so much pessimism, there is so much negativity surrounding this earnings report that I believe from the psychological market play, there's actually an upside potential here. So, what you're asking me about the delivery side of things, yeah, I think they are trying to be the ecosystem of, you know what, if I want to have food delivered to me, I'm going Uber Eats, whatever it is. So they are trying to build that up. I really like the company here for the technical reason, Oliver. There's support in this stock right around 29 bucks. Now, I know it's not a long history, right? This thing's only been around for about 6 months now, but 29 seems to be a little bit of a line in the sand here. If you look at the option pricing, the option market is pricing in somewhere of a move about $4. Pretty expensive move, right? That's about 13% or so. However, that 29 area has held up as some good support. So what I'm looking to do is I'm looking to employ a strategy called an iron condor. An iron condor is typically a range-bound type of trade. So I'm selling both a put spread to the downside and a call spread to the upside, looking to take advantage of what the market is pricing in for that expected move. However, that bottom that I'm selling, so I'm selling the 30-28 put spread, I'm selling the 34-36 call spread. I can collect somewhere around $1.25 for that. That is rich. That is expensive premium. Because no matter what happens to this stock, whether it goes to 0 or 100, the maximum value that spread could ever be worth is $2. I'm collecting about $1.25. But what I'm doing is basing that break-even area for me around 29, and then the upside, I make money all the way up to 35.25 in the stock. So my range for my trade is like 29 to 35-ish. If it goes outside of that range, okay, it goes outside, but I know what my loss is. I'm stopped out. I love the reward to risk on this. The premium is really rich. And like Michael said, I do think there could be an upside surprise here.
So, Scott, to put this on the chart, if we bring up Uber chart again, guys, real quick, and then let's come back to follow the trade here, because it's a little bit more complex with the two legs. But the bottom at the stock around 29, you're basically saying, Scott, you want the trade to find some support there, because if it doesn't, that's where the trade starts to hurt if Uber drops big to the downside. Now, the market maker move at $3.75 is not small on Uber. For $30 stock, the market's expecting a 10% swing, and that's fine if it swings to the upside, but you are fading the potential of the magnitude to the downside that's being priced in options.
I absolutely am. However, Oliver, again, I'm stopping myself out. So again, if this thing goes to 25, 20, whatever it is, the most I can lose is 75 cents, no matter what happens. So I love the proposition here. I love the reward to risk. Mathematically, it works out. If that 29 area holds as some good technical support, fantastic. If it doesn't, okay, I know what my loss can be.
Okay, I like it, Scott Bauer. Nice stuff. We will be following up. Uber is on the way. Going to be a big one. Just a couple bucks above the low. Thanks to Scott, the CEO of Prosper Trading Academy.